The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading and where are markets on a very important day where we get to hear from Chairman Powell in front of the Senate Banking Committee, I believe, today. Markets, we're flat right now. We were higher for basically the entire pre-market session. I'm going to zoom it in from the close of action yesterday. We're as high as about 4,064. Pretty tame action coming into a very important day today. Tomorrow, he'll be in front of the House. Friday, we get the non-farm payroll numbers. 1 week from today, we get the CPI report, Consumer Price Index. And 2 weeks from tomorrow, we have a Federal Reserve announcement, a meeting to follow, a hike expected, 25 basis points. The expectation as of now, but 50 in the mix. And we get to hear from Chairman Powell today, I believe in about an hour, I think 10 o'clock a.m. Eastern Time. So when I get off the air, when our man Basil Chapman's on there, Steve Rhodes coming up as well. I heard Steve's interview with my dad last night. They said there's going to be some good action today, man. Basil, Steve, when they're on the air, Powell's probably going to be talking. And the market, it's probably going to be reacting, but as of right now, it might just be waiting to see what the chairman has to say. NASDAQ 100, we're up by 12 points right now. We got Meta catching a bid. They're going to be laying off thousands of workers. We'll get over to that in a moment. Dow off about 15 points right now, 33,436. The Russell up by 1 point. Look at that sell-off in the Russell yesterday, man. You're talking about an index, 1,900 points, and you trade down, 40 points? More than a 2% move from highs to lows in the Russell. You want some volatility, man, for some context, okay? What'd you get in the S&P? About less than a 1% move from the highs to the lows? Yeah, and let's check out the NASDAQ on that acceleration yesterday. Market getting a little bit ahead of itself at the highs probably. Yeah, you're talking about maybe 1.5%. You're talking about 12,480 down to 12,320. That's 160 points, man, on a 12,400 point index. Nonetheless, we'll see where we go today. Crude, negative by about 51 pennies right now at 79.96. We'll call it $80. We're almost up to $81 earlier in the session. How about Bitcoin, Ethereum? I got a Coinbase story, man. I'm going to kick off the program with a Coinbase story after the market recap. Bitcoin, negative by $5. Ethereum, positive by 1. The moral of the story, by the way, it's going to be never put any money in Coinbase as we tease it. And what do we have as the chairman approaches? Check out that line. We've been talking about it, man. The 10-year, which way are we going to go on that trend line? I have a 5-minute chart, folks, and look at how we are trading off of this trend line right now. I was talking about it yesterday, and look how long that trend line is. It's a trend line going back years. Well, close. Maybe almost 2 years, right? Let's put it on a 5-year daily. Is that what I'm on right now? No, I'm on a weekly. 5-year daily, and then I'm just going to zoom in on about the last year and a half, right? Very, very well-contained channel line. And absolutely remarkable that when you put this thing on a 5-minute basis, where is the market? On the 10-year, we are literally chopping against the upper boundary line. And you know what that means, man. You get lower price, you're going to get higher yields. So a little bit of a dangerous scenario in terms of where you are. Are we going to break out of this channel line? Or, boy, would you ever trade to the bottom of that channel line again? And, folks, if you do, okay, what are you talking about, man? You're talking about 103 almost. And, boy, I was listening to my dad's show. Is this the one he was talking about? Yeah, I think he was talking about 104. He was probably talking about this area on the 10-year, I think, because I had 104 in my head. Yeah, it's like 104. And that would bring you down to the bottom part of that channel line if we get that move, boy. And that's talking about some rates if we get that move as the S&Ps roll over to slightly negative territory. You got the 30-year right now up by 21 ticks, back to a 15-minute chart. And we jump to the VIX this morning. Volatility index right now, 1888, still relatively low volatility priced into this market with a pretty important couple of weeks coming up. 15 days. Yesterday I started with 16 days, 13 trading days. What do we got now? 11 trading days left after today. Let's jump to the dollar index. Always keeping track of the currencies these days. Stronger dollar, that's going to weigh on the markets, man, and that's quite a move from where we were overnight. You just moved from 104.1, we'll call it, to 104.6. That's half a point move. And you are now well above where we were to the close of action yesterday. Watch out for this market, man. Market does not like a strong dollar and higher yields, which they are coinciding as one. We ramp up for the Chapman this afternoon. Or this morning, I should say, coming up at 10 o'clock. All right, Coinbase. Coinbase has some volatility yesterday, man, up to 62.77. Up to 69.82. You closed at 62.77. You put this thing on a 3-year weekly. That's where they go public, folks. April of 2021. You're up 100% this year. Congratulations. But all you've done is got back your losses as of basically a couple earnings ago in October. Now check out this. We've been talking about that if I was going to be holding money just as a customer, right? Customer funds, wouldn't have them in Coinbase, man. With everything going on, I just don't trust that company that somehow they're going to hold them like you would consider it a bank. And this is another example. You got somebody suing Coinbase after they basically are claiming, okay, because who really knows here, man, in crypto, right? They're claiming that $96,000 got taken after a security breach, and Coinbase is telling them it's his problem. Now, a couple quotes in here, okay? He's suing over the 96 grand that said it was stolen out of his Coinbase account. Nice Staten Island gentleman, Jared Ferguson, claims he received a text from so he claims he received a text from his mobile carrier in May describing a SIM card change request that he had not made. When he restored service to his iPhone the next day with a new card, guess what? All the money was gone from his Coinbase account. Now, the quote they have in there from Coinbase, okay, and this is, I don't know if this is real. Okay, this is what he is alleging, I believe, saying that according to the complaint, this is important to get all this stuff, right? According to the complaint, Coinbase wrote Ferguson. We don't know if they actually did, but nonetheless, I kind of believe it. Please note you are solely responsible for the security of your email, your passwords, your two-factor authentication codes, and your devices. Now, here's what he says happened, though, and if this is the case, man. Ferguson claims Coinbase's security procedure fails to flag and hold obviously fraudulent and unauthorized transactions. He says his account was drained in less than 8 hours from a new device immediately after his password was reset, and it was done from an IP address not previously associated with his account. I mean, anybody with two brain cells, folks, if you're programming something and you understand language, there should probably be a few red flags that get put up on an account. If you're draining the account after a password reset and an IP address not associated with it, nonetheless, we'll see how it plays out. Now, here's the other side of that I always think about, right? People are very smart. Crypto is like the wild, wild west right now. Now, he's claiming that's all his savings in there, and it may be, okay? But let's just say that there's some bad acting going on his part, okay? What could be happening, and I'm sure this is what does happen, is that they help facilitate the scam, and then they say they didn't know what was happening, right? Like somehow they allow somebody else to hack into their phone, take their funds. They're in crypto, so before you know it, they're probably really hard to track down, right? And then the holder of that account might say, oh man, my phone got stolen and all my funds got taken. Why didn't you guys stop that? So that could be part of what they're talking about. But guess what, man? I wouldn't have my money in there, okay? And listen, banks, we've dealt with it at TFNN, man. We got our bank account hacked a while back. Banks are tough even sometimes, but at least you're regulated to the degree and government insured in there as well. Stay tuned, folks. Markets negative by 1. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now negative by 1 point. NASDAQ 100 barely in the positive. Dow negative by 27, barely in the red. We got the chairman of the Federal Reserve coming up today. Tomorrow, we got jobs numbers on Friday, folks. We got a lot of action this week to talk about it. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, Fast Market. If you haven't checked out the program, folks, please do. Great lineup, great guests, Kevin Hincks, Tom White. They walk you through hypothetical trade setups, but today we're going to be talking a little Fed, I'm sure. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, today's oxygen in the market is really going to be taken over by Jerome Powell and his comments. So he starts at around 10 o'clock Eastern, 9 o'clock Chicago time. And, Tommy, he's going to have to talk about the last payroll number, the last CPI and PPI, the last PCE data that showed inflation reigniting, the unit labor cost that was higher. So this is going to be interesting how he is going to frame this going forward. Probably will direct the markets for the next couple of days till we get payrolls on Friday.
And it's pretty interesting, right, Kevin, that he's talking about all of the data that's been digested. And here we are sitting on March 7th, and we're going to get the data flow coming up, man. Friday, we get the next jobs number, and here he is having to talk about, and it's pretty remarkable how far back you go sometimes, Kevin, right? Because he's going to be talking about the January jobs number, which is including really data from January 1st, and here we are on March 7th. And we're getting the next non-farm payroll number coming up on Friday, and then we get CPI on Tuesday. You've always talked about, man, being data dependent, staying short term. Do you have any expectations beyond? I'm sure the chairman's going to talk about those numbers. He's going to be talking about what's going to be happening going forward. But it's pretty interesting in terms of where the numbers are and just how quickly the next numbers are coming down the line. I mean, we're not going to get more than a few days. He's going to be speaking today to the Senate, tomorrow to the House, and within 48 hours, we got another jobs number that already is going to be into the market.
Yeah, you're right. I mean, we get JOLTS data tomorrow and ADP. We get not our jobless claims on Thursday, payrolls on Friday. March 14th, we get CPI and a 15th PPI, and then we go right into a Fed meeting the 21st and 22nd. So, yeah, in terms of market-moving events, this calendar is getting pretty crowded here, Tommy, with things that can move the market. So, yeah, I think everyone should buckle up. I think this is going to get a little interesting between now and the March 22nd Fed announcement. So, earnings let's face it, Tommy, we're getting to the end of earnings season here. The names are getting pretty thin. We've got a couple good names coming up this week. Like we'll cover CrowdStrike today. That'll be a good one. But the names are getting thin. Thursday afternoon, we'll get Ulta and DocuSign. But all things considered, the earnings aren't that. It's going to be data right now, and it's going to be the overall watch yields. Think about what happened yesterday, Tommy. Yields started the day lower, and the market started higher. And as they moved from negative to positive, the market lost its bid and went from positive to negative, or base close to unchanged on the day, actually, is what the market did. So watch the dollar and watch yields. But if you're going to watch one thing, watch yields.
Yeah, I got a chart right now of the 10-year. The futures up on the Thinkorswim platform, and even pretty interesting in the last, half hour or so. I got a 15-minute bar chart up here. The 10-year off about 8 ticks, and in that time, we've seen the S&Ps roll over to slightly in the red from slightly in the positive. I was going to ask you, Kevin, you beat me to it. The 10-year right now, 3.96 about. And the dollar index, where we are, let's pull up the dollar index on the Thinkorswim platform as well. Dollar index right now, 104.63, catching a bid this morning, actually up from almost 104.1. What do you think of where, maybe, and this is speculation, I know it, and I'm asking a hard question, man, but I look at the 10-year, right? I'm looking at, savers like my mom who's retired and stuff like that. And I know this goes beyond the active trading that you guys sometimes do on Fast Market. But where do you see that 10-year right now? I mean, is it all about the data and where we go? 4% ain't that bad right now. But my feeling is I think we might have a little bit higher to go as we battle through these next few numbers and maybe the next few hikes.
Well, it looks like by the data that we're getting, Tommy, at least from last month's data, that the Fed speakers that have been coming out have been talking about that middle rate going higher. And just remember, from some historical perspective, these rates aren't high. They're really back to close to normal. So you're right. The elderly, people that might be in bonds or savers, they benefit from rates being a little higher. So and that's good for them. They were punished, frankly, during zero interest rates. So I think it looks like you're starting to see higher and higher Fed funds rate levels starting to creep into the conversation. I don't think the Fed's going to go 50 basis points, but what they might do is extend the number of rate hikes into the past. Although, we still have a bunch more data. If it starts coming in hot, does Jerome Powell have to move something towards 50 basis points? I don't know. We've moved a lot in terms of interest rates, and you want that lag to catch up to the market, but he's got two jobs as full employment and inflation. And full employment is there. We're at 3.4%, but inflation has turned out to be a much harder fight than he thought.
I appreciate you reminding us, man, and I like to hang on those two as well, because that's it, man. And full employment, I mean, you could say we're beyond it, and that's part of the problem, right? So full employment versus price stability, we are out of the woods, man. And just talking about savers, man, because I do think about it. My mom's retired, right? And as she went into retirement, Kevin, pretty early, it was pretty difficult because you got COVID, you got 0% interest rates on fixed income, and so where do you get your money, man? You have to put it at risk. But right now it's a different story, man. I was looking at 5-year CDs yesterday, non-callable even, and you're looking at 4.6%, folks, on 5-year CDs. That's just an easy CD. And of course, there's greater fixed income out there if you want a little bit more risk, maybe treasuries. But that's pretty fascinating. If you're not aware, on a retirement account, some of the rules, and it all varies, but if you are on a strict fixed income, and this is going beyond, this is financial planning, folks, and I was registered, I'm not right now, okay? But in general, it's like you take out maybe 4% of your retirement a year, and if you do that, you'll make sure you're okay. Well, man, if you're getting 4 or 5%, Kevin, it's pretty cool that you keep your capital, you take out that money. I digress, but that's a real battle for capital right now, man, and rates, they're pretty decent. With that in mind, Kevin, you mentioned some of the stocks. I'm sure the Fed will be a topic. What are you guys coming up on Fast Market talking about today?
Yeah, well, so we've got 2 of the 3 names ready to go. We've got CrowdStrike, and we're going to trade Teladoc today, but nice. Probably Campbell Soup, maybe one of the other names, but probably that. But definitely CrowdStrike will be the focus today. And Teladoc. Sorry.
I got Teladoc up, man. That is a tough chart, down to $21 from 308. I believe ARK has a big position in them. Give us a little teaser on Teladoc, man. You talk about a demise. $25, down from 300 and change, let alone even $77 last year.
Unprofitable growth, Tommy. That's what the market has punished, and their inability to get over the hump in terms of becoming profitable. They're still a good business that's growing, and telehealth is not going anywhere. It's going to keep growing as we evolve as a society, but it may not be ready for prime time just yet, Tommy.
Absolutely remarkable chart, man. And, not many would have thought a company like this, right, goes through COVID in 2019. In 2018, folks, Teladoc was trading at $86 and it's trading at $25 in 2023. Kevin, I appreciate the time on a busy morning, man. I look forward to the program at 12 o'clock, and we'll talk to you tomorrow.
Have a great day, Tommy.
You too. Folks, check it out. Today's going to be a good one. The chairman, he's talking today, tomorrow, Fast Market at 12. We'll be right back for the open, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. The opening bell rings, all the markets slightly in the red, just like that. We're talking about 2 points on the S&Ps, 2 points on the NASDAQ 100, 4 points on the Russell, and 19 points in the Dow, but they all roll over slightly. Let's take a look at where yields are right now as we come into the opening bell. Down a bit. What do I have? I've got an hourly chart. Let's put it on a 5-minute to see the action real quickly. The 10-year up by 7 ticks, but off of the highest. And as I said, man, that channel line right on the 10-year, look at that. Absolutely remarkable that we're ticking to the channel line. When you're talking about this channel line, folks, goes back a year and a half. And on a 5-minute basis, we are touching this thing and trading off of it right now. Interesting. VIX right now, 1888, and let's see how the dollar index is trading. Kevin said it, man. He beat me to the question. He beats me to the question a decent amount of the time. You know why? Because he knows what's moving this market as well, man. I'm going to ask him about the things I'm seeing, right? We're seeing yields. We're seeing the dollar. And yeah, we got the dollar index at 104.65 right now, continuing to climb, and that's going to put a hurt on these markets, man, if you see this thing back up there. Now, back to the S&Ps, okay? And I'm going to go back to the hourly chart to get things back about 20 days. The run lower begins in the middle of February, okay? You got a spike high of 41.88 back on February 7th. You chop around in that area, and you could make the case that things really begin to accelerate from basically the highs of where we were February 15th, price point of about 41.75. Okay, I lined it up at about 41.67. And folks, these don't work all the time, okay? They don't work every time. They don't work all the time. But Fibonacci levels, and this is going to be a segue to our man Larry Pesavento, who's coming up today at 1 o'clock with his program, but he's not going to be doing his show tomorrow, folks, because he's got a live trading event taking place tomorrow. If you're going to sign up for it, please do it today so that we can make sure we get you in the room. Okay, because if you sign up 5 minutes before the webinar begins tomorrow and you're not in our Discord server and you're not in our Tiger's Den, and we have to send you that link and then add the tag to get you into the room, okay, it's going to take a few minutes. So please do not sign up at that last minute. Sign up today for it, but I posted into it because I follow Fibonacci's myself, folks. I believe in them. I don't know what it is, the golden ratio, how it exists, what is going on, but it is real, some form in life. And we came right into that 618, folks. I mean, look at that, right? Almost to the tick. Not really, but when you put it back 20 days, it basically is. You got to give yourself a little room there, okay? Look at that. The bodies line up, the tails go over. You get 3 bars for an hour when you're going back to a trend that's taken place over the period of 3 weeks, okay? And we peg that 618, folks. There's 618s all over the place in this market, man. And what do? We do a 618 retracement, and boy, if you're going to talk about if this ever becomes an A to B, C to D, okay, you want to talk about where we're going, man, that's a 250 point. A to B, C to D, you'd be coming off 4,075. What's that bringing you down to? 38.25, something like that in that range. And you check out this chart, where's 38.25, folks? The lows of the prior low from December. So be careful, man. That is not outlandish with what's going on. We'll see what Chairman Powell has to say. And then we get the data on Friday. We get the data on Tuesday, and then we get the Fed 2 weeks from tomorrow. But nonetheless, right at the 618. Interesting, right? Okay. What else do we have going on? That's the segue, folks. Larry Pesavento. We've talked about it. Please check it out. You get his newsletter as well. It's $295, folks. The other thing you can do, if you want to even add savings on top of that, folks, you can always head on over to the services tab, okay? Because we have newsletters and we have services. This is one of the services, live trading events. You can also buy Tiger Dollars to add the savings as well. We do 2 Tiger Dollar sales a year, folks, where we double the bonuses. But Tiger Dollars are available 12 months a year, and you still get a 10, 15, or a 20% bonus on whatever you spend. They never expire. So you could always spend $500, you get $550, you apply $295 of that to Larry, and then what happens? You get his newsletter for free for a month. You pay the $295 Tiger Dollars, and you have the bonus of the $50 that you got there with your extra Tiger Dollars remaining. But he's going to be in there tomorrow, 9 till 2, and pretty cool that we got the chairman talking today. He's talking tomorrow, and then we get, of course, Friday with the non-farm payrolls. He's going to be talking methodology, folks. If you haven't attended one of these, I encourage you to check it out. It's always a fun event. We got a bunch of good traders signed up already, and that's taking place tomorrow. So this is kind of your last chance. Please sign up today, and we'll get you in there. From Mr. Larry Pesavento, he was texting me this morning. He's ready, baby. He's ready for tomorrow's action. All right, what else do we have pulled up? Yeah, we'll talk a little bit more Bitcoin. So Grayscale. The court is to hear Grayscale bid to convert the crypto trust to an ETF. Regulators say Bitcoin too ripe for fraud and manipulation. Going to be interesting to see how this one plays out. They want to convert the $14 billion Bitcoin trust into an ETF. The SEC rejected the plan in June. Crypto markets are too ripe for fraud and manipulation. Grayscale sued, and you got a federal appeals court looking to overturn a decision the company called arbitrary. Yeah, and I'd say it has big implications. Allowing an ETF means anybody with a brokerage account, which is basically available to anybody who can fog a mirror in the U.S., can speculate on Bitcoin. Yeah, and it would be a game changer, and we'll see what happens. But boy, you'll see Bitcoin's price react if that thing gets approved, for sure. Because Grayscale Bitcoin Trust, that's a trust, that's not an ETF. And there are vast differences, folks, and I would pay attention to that, to say the least. All right, what else do we have going on? Now, Meta. Let's talk a little bit of Meta. We're going to talk Meta. We're going to talk Snap. We're going to talk a little TikTok. We're going to talk a little China. Meta plans thousands more layoffs as soon as this week. Second round of cuts in 4 months driven by an efficiency push. May finalize those plans in the next week, is what they say. Meta was trading higher on that news this morning. Yeah, and you're catching about a 2.4% bid right now on Meta, up $4.50. Talk about well off the lows of $88 as they turn things around. You're now basically almost pushing the highs from the earnings at the beginning of last month when they got that spike higher. Meta trading higher. Now, Snap has been trading higher, up 5% today, okay? Huge acceleration yesterday on the idea that TikTok, banning TikTok, gaining some steam in Congress. And I mean, it goes to say, folks, the articles are everywhere, right? The articles almost write themselves, and I'm sure they do with ChatGPT if you got current information in terms of knowing what's going on as opposed to outdated data, which that ChatGPT, I think it's only good until 2001 data they have. If you use ChatGPT, folks, and you ask it about the Federal Reserve and rates, it has no idea what happened in the year 2022, and you should see some of the answers because they're remarkable. If you take out 2022 data, that's what ChatGPT is running off, I believe. And so I started asking about where will the Federal Reserve shape interest rate policy this year, and the whole answer was geared around that it's been low rates forever or something like that. It had no awareness of recent events. Now that's going to change, but nonetheless, China's foreign minister says ties with the U.S. risk going off the rails. Warns Washington against indulging in what he calls McCarthyism. Yeah, well, that is Chinese propaganda for you at its best, folks. McCarthyism was going after Americans, not going after the Chinese, right? Yeah, to keep things in context there. I would say that you're going to see them come for TikTok, man. I think it's going to happen. Look at Snap again today, 6%. They should. There's too much data to allow the Chinese to control an app that's on everyone's phone that is the most used app by young adolescents. I mean, that's just something that we shouldn't allow happen. So we'll see if it plays out. Nonetheless, Snap catching a bid up 6% today after a huge move yesterday. And you're talking about up, 24% from the lows of last Thursday for Snapchat. Now, they're taking a look at the daily, right? It's a tough chart, man, when this thing just cascades. 2 years ago from $40 down to $10. You've been chopping around, but you're pushing highs, man. I mean, we got highs of September of last year at a price point of about $12.90, $12.94. You're pushing $12.50. Recent highs from February, $12.44, right where we are right now for Snapchat. Stay tuned, folks. Flat markets. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&Ps negative by just 2 points right now. NASDAQ 100 barely in the positive. I wonder if that's getting driven by some of even Meta. Let's see how the big dogs are trading before we get into Dick's Sporting Goods. Apple is flat this morning with the market. We got Microsoft up 0.2% so far. Google shares up by about 0.2% right now. Yeah, no huge action right now. NASDAQ 100 barely in the positive. And back to Dick's. So Dick's, this goes back a 5-year weekly. Look where we're pushing this morning, man. We're pushing highs. We're pushing highs from 2021 on Dick's Sporting Goods. And pretty remarkable that you did actually get a spike on that huge volume day. And where did it go? Where did it go? That's a weekly, excuse me. May 23rd of last year. Let's put it on a daily and see that day. Absolutely remarkable, folks. Look at that 618. If you had it on your chart, you got Dick's Sporting Goods at around $64 and it's trading at $142. And what is that? Less than a year ago. Remarkable, man. And this company getting into the numbers. Okay, so they're up $10 today, up 7.4% on their numbers. And how about a same-store sales beat where they come in at 5.3% and the market was just looking for 2.1. Staggering numbers, man. Full year guidance for 2023, above what the analysts were looking for. $293 a share versus $288. They take in $150 million more than the market thought. $3.6 billion versus $3.45. Net income, $236 million. Yeah, lower than what they had last year. Margins feeling the push, though. Confident it has resolved its supply chain dilemma as it heads into the 2023 fiscal year. And they have an earnings call starting at about 10 a.m. Eastern time. Now, here's what I'll say about Dick's Sporting Goods, man. They're not cheap, that's for sure. That place is expensive, but they got a lot of good stuff. We were in there for the kids buying T-ball stuff last year. But they got a good thing going, man. During the pandemic, I remember talking to my dad about this on the programs as well. They were one of the first ones, man, that I experienced during the pandemic. I think it was maybe October during the pandemic. Could have been that early. Trying to think of what I was buying a present for. I was buying shoes, and I think it was October during the pandemic, so maybe 4 or 5 months in, maybe it was sooner, because I was ordering and pick up curbside. The only thing I had ever picked up curbside like that before was Outback Takeout, and here I was picking up brand new sneakers from Dick's Sporting Goods, sitting in my car talking on the phone, waiting for them to get dropped off at my window. Their stock accelerated for it, rightfully so. And, man, it's pretty interesting. I mean, it speaks to management how quickly they did it, and maybe that's what's happening again, man, as this thing is pushing the highs. Not many stocks pushing highs that you had in 2021 like Dick's Sporting Goods, but, boy, when you beat on comp sales like that, not bad. Okay, what else do we got pulled up here? Let me find the right one we're talking. We talk Meta. Yeah. Taxes, Coinbase, crypto, Biden, Larry. All right, let's jump around to what else we have going on. Let's check around to see how the dollar index is doing right now with the market slightly negative. Boy, we're pushing highs on the dollar index, man. Pretty remarkable that we just had the dollar index, okay, move up, 20 basis points, almost 25. This is from 8:30. We're trading at 104.45. And even if you look at where we were on the opening bell, right? You were at 104.62. We're at 104.68 right now in the dollar index. You start seeing this thing jam higher, man, coming into Powell, and you better watch out in this market, folks. Okay? Now, I talk about 618s everywhere in this market, okay? We talked about it. We pulled it up. Where did we just roll over yesterday? At about the 618. And, big picture, which I've done many times, folks, I'm going to put this thing on a 5-year weekly on the S&Ps, okay? And I was talking about it yesterday. It doesn't mean the market's going to get down there, okay? But S&Ps have a real shot of getting to 3,200, man. If inflation rages and rates rage higher, look for that 618 on the S&Ps. It wouldn't be outlandish at all. You come back, maybe you test an area that we came into COVID, somewhere around there, right? You're also going to come back to the area that you chopped around at in September 2020. The data's going to decide it, okay? And I would find it remarkable if inflation is tamed as quickly as some expect, because somehow the numbers keep defying things in terms of where we are. And I was talking to somebody yesterday saying 3,200, right? Saying 3,200. Man, that's only 20% down from here. What if it goes further? Well, what if it goes further? Yeah, what if it goes further, right? It could always go further. And you can scale in or something like that, but it's pretty interesting that you can have some money in the fixed income side of things. And if you get a drive down to 3,200, I would have some cash available in this market, folks, because I see it as very difficult that inflation is going to go away as quickly as you may expect. And maybe the pain is going to come at the end of this year when, guess what? Maybe we do get overinflation, right? Maybe the Fed sticks it out. They do 2 or 3 more hikes, and then they hold it there. But maybe they hold it there for 6 or 9 months, and maybe the strain finally starts weighing on things in the economy. It's going to be interesting to see what the chairman has to say, but I'm looking at 618s everywhere in this market, folks. And if you don't think it can happen, just go over to the NASDAQ 100, okay? Because we already did a 618. I know a lot of you probably already know this, okay? That market traded to a 618 like it was nothing. You almost got to a 618 retracement by June of 2022 last year, let alone we actually hit that low in October like the rest of the market. But pretty remarkable. All right, crude right now sitting at about $80. Yeah, gold contract. That's what happens when you get a strong dollar, man. Look at the gold rolling over. 1834 as we got the dollar stretching higher right now. You may see that reaction in the S&Ps as well if that holds, folks. Let's check around to some of the other currencies, see how we're trading. We got the euro US dollar rolling over. We were just at almost 107. We're at 106.4 right now. I imagine we're going to have some dollar yen action. Yep, up to 136.27 right now in the dollar yen as we have a stronger dollar. Is that right? Yes. Yeah. Stronger dollar, weaker yen, gold trading lower. I have to walk myself through those relationships even now still. Let's see how Meta's trading on their news that they'll be laying off. It's not even their news. I think it was just reported. They'll be making layoffs. Let's check around to some of the streamers. Netflix shares. There's some volatility for you yesterday. Down about 0.4% for Netflix. Warner Brothers Discovery up about 0.75%. We jump over to Disney shares up about 0.2%. Let's see how some of the airlines are trading right now. Look at this. Yeah, Delta up 3%. United catches a bit up 3.7%. What's going on with the airlines? Anyone know? Yeah, how about that? Is that no? That's not what it is. Anybody know why airlines are spiking? Not sure. Interesting that. What is it? The Justice Department is going to challenge the Spirit deal. We'll see how that plays out. Spirit, of course, crashing on that news yesterday, down pretty dramatically. And JetBlue almost unchanged, which is interesting. Down a bit, up a bit, actually, excuse me. But you finished the session basically where we started. And it seems like that deal is going to catch some flack. And that was part of the reason why maybe, what was it they were going to buy? Frontier? No, Frontier was going to buy Spirit. And part of the reason why they said maybe you shouldn't go for JetBlue is because they won't get it through the regulators. Well, we're going to see that play out in real time, and we'll see where it goes. The market, we're just waiting, man. I think the chairman starts in 10 minutes. And check that out, right? On a daily basis, I mean, pretty remarkable that you're right where we at May of last year. 4,052 after diving down to 3,500. Chairman's going to start talking in 10 minutes. Basil Chapman's coming up at 10 o'clock. We got one more segment, though, folks. Don't forget about Larry Pesavento, folks. Sign up for that webinar. It starts tomorrow at 9 o'clock. Check it out on the front page of TFNN. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets right where we kick things off. Chairman Powell coming up at 10 o'clock. We got live programming all day, folks. Don't forget about our man, Larry Pesavento. I know I'm talking about it. It does about a couple of these a year, folks. It's $295. You can use Tiger dollars. It comes with a month of his newsletter, which is outstanding as well. That's a $97 value. It'll be archived. You can watch it as many times as you like, okay, forever. 5 hours, 9 till 2. Larry doesn't usually trade the last 2 hours of the trading day, which is why he sets it up like this. So check that out. Begins tomorrow morning at 9 o'clock in the morning and ahead of the non-farm payrolls on Friday. Interesting article from the Journal today, how seasonality affects our view of inflation and jobs, and they break it down by explaining with hot dogs. Hot dogs, probably very seasonal, which is why they had a great example in here. Did the U.S. add 500,000 jobs in January, or did it lose 2.5 million? Well, guess what? Both happened. Because seasonally adjusted, we increased 517,000. But the 3 million difference shows how views on the economy are shaped by federal agencies accounting for normal yearly patterns due to factors such as temperature, holidays, school dates, summer hot dogs, for example. And this is what you talk about in terms of the Labor Department, non-farm payrolls, January 2023 change from December. Unadjusted, did you know this? Down 2.5 million. Seasonally adjusted, which gets all the press, up 517,000. And the way they break it down is, man, there you go. Hot dogs in July, huge numbers. January, not so much. So what they do is they have seasonal factors that relate to where we are. Sales are typically 10% higher in April than the monthly average, so April's seasonal factor is 1.1. Okay, if next July's sales are $160, the seasonally adjusted figure would be 107 because you take away the huge acceleration because you get 1.5 times as many as the adjustment because what's happening? Everyone's buying hot dogs. You seasonally adjust it. It's pretty interesting, man, how those numbers differ. If you get a chance, you got a subscription, check it out. I could break it down for a while, but it's cool data. And what we're all getting is a big let's not data, man, because you better know what's going on with this data and how it's calculated. CPI versus PCE, seasonal adjustments, right? All this stuff, man. Stay tuned. It's going to be an interesting day, folks. Basil's up next. Steve Rhodes at 11 o'clock. We got Chairman Powell talking probably for the next couple hours. Fast Market at 12, Larry at 1, Dave at 2, my dad from 3 to 4. Have a great one, folks. We'll see you tomorrow.